Welcome back from yesterday's auction. For those of you who participated in the auction, the money will go off either today or tomorrow. There were some good results that came out depending on how you want to look at and depending on how the trajectory was looking. Yesterday, the auction was for the 25-year bond, the 15-year bond, the 5-year bond, and the 2-year bond. The 25-year bond managed to bring in a 16.29%. Remember, the 25-year bond has a 16% coupon rate. So when it brought in a 16.29%, it made sure that we are getting the bond at par. The premium we ended up paying is close to 0.05%. It's very, very, very minimal. That means for someone who bought a bond of 1 million, they end up just paying an extra 5,000 as a premium, which is very, very small. So that bond was at par, and that's very good because it kind of continues to encourage people to invest in a bond. But 16.29% in March in 2026, that rate is a good rate, because when you pay attention to the trajectory we were starting to take, the trajectory, especially since Jan, it was for a downward push of interest rates in treasury bonds to come down. Government's cost of borrowing is being pushed down, and one of the impact were the treasury bonds. So us managing to get a 16.29%, I will tell you, it felt very good. It's like a 17%. You have to stay in this market long enough. You have to pay attention to the trends to understand when you are winning. So in March 2026, a 16.29% was good. And I know when you look at what the total bids were for the 25-year bond, they bid close to 1.3 trillion. Government accepted around 416 billion, rejected close to 900 billion. That money is back in the market waiting for the April auction. Then we come to the 15-year bond. Very, very disastrous. 15.75%. A 3% premium, which is good because the 15-year bond, it last paid a coupon on Jan 8th, right? So it has 60 days of accrued interest. The 3% premium people paid, they will recover it. They will recover it in July. The premium we paid on the 15-year bond is not the same premium people paid on the 10-year bond last auction. But at a 15.75% in March, that is really good. Why? We pay attention to the trends in the yield market. Last month in Feb, the 20-year bond, which is the close comparative to the 15-year bond. Remember, the 15-year bond matures in 2039. The 20-year bond matures in 2043. At any one point, the 20-year bond should always have a higher yield. The people who bought the 20-year bond in Feb last month, they paid a coupon of a yield of 15.49%. They got a small discount. The anticipation in this auction was that the 15-year bond might even have a lower yield than 15.5. The anticipation was between 15 to 15.5. Us getting a 15.75%, reducing the anticipated premium from as high as 5.7% to just 3%, it's a win. It's a win because that's a premium you're going to recover easily. And at the same time, this is a coupon. This is a bond that has a very good coupon rate of 15.8%. So for whoever invested in this auction, they really, really made some good money. So what is the takeaway? The takeaway, the interest rates are coming down. They are aggressively coming down. We got a little reprieve in this auction because of the war in Iran. It has been trying to push the risk back. We don't know if it's going to continue pushing the risk as much as possible when we enter into April and May. Depending on how long that war is sustained, everything is a little bit at a standstill. There was the bombing of the Qatar liquefied gas. That was very bad. So we don't know how much this war in Iran and the way it's impacting the Gulf states, it's going to continue. And so the understanding is we might continue seeing a little bit of a pushback. But remember, the government is determined to make sure interest rates come down. And because of just that alone, in the 15-year bond, they bid for close to 598 billion. And they rejected almost 570 billion. Yes, they rejected 500. They only accepted around 20 billion. And that means that tells you one thing, that the people in the market makers asked for a higher rate, and Bank of Uganda and Minister of Finance said no. We want rates to come down. They have to stand the ground to ensure this doesn't go back into the 17% which people experienced in the prior year, in 2025. And that's good, that's understandable. Either way, even at 15%, we are still making money.